Hey everyone, welcome back to Crypto Clarity 101. Today's market was wild. Crypto took a sharp dive, then partly recovered. In this video, I'll walk you through why it happened, what drove the shakeout, and what to watch next, all in plain English. Let's jump in. In the last 24 hours, crypto prices have dropped sharply. Bitcoin fell as much as 10 to 12% during the day. In one extreme move, Bitcoin plunged from about $114,000 toward $105,000, before rebounding back into $110,000 plus territory. Many leveraged traders were liquidated, over $6 to $7 billion in margin positions wiped out in a short time. The crash is tied to new external shocks, especially trade policy moves. So, big swoosh down gives forced selling, gives partial bounce, a classic volatility cascade. Here are the main triggers behind today's drop. 1. Trade war escalation and odd tariff shock. President Trump announced an additional 100% tariff on Chinese exports and tighter controls on critical software exports. Markets across risk asset stocks. Crypto reacted badly to rising geopolitical risk. 2. Mass liquidations, leverage unwind, because many traders used leverage borrowed money. When the market dropped rapidly, their positions got automatically closed, liquidated. That adds more selling pressure. The scale was enormous, billion-dollar liquidations in an hour. 3. Overbought conditions, profit-taking before today. Crypto had been on a strong rally, hitting new highs. Many positions were overextended, so a shock was enough to trigger aggressive profit-taking. As prices slipped, more traders rushed to exit, amplifying the move. 4. Regulatory policy uncertainty in the U.S. A major crypto regulation bill in the Senate is facing deadlock, creating uncertainty about how crypto assets will be regulated going forward. Also, the partial government shutdown has stalled SEC review of new ETF applications, for example for Solana, XP, etc., removing a potential positive catalyst. All this. But why did altcoins get the worst of it? Altcoins often have lower liquidity and rely more on speculative flows, so they tend to drop harder than Bitcoin in times of stress. Big names like Solana, XRP, Dogecoin, Sui saw very steep declines. Capital tends to rush into the safest assets or simply exit the market, which drags down smaller tokens harder. The bounce. Why did things snap back? Automated and algorithmic trading systems likely kicked in to buy at deeper dips, creating a rebound. Some buy orders were placed near perceived support levels around $105,000, $110,000. The rebound shows there's still demand at lower levels, though the strength of that demand is uncertain. What to watch and next moves. Here are some things to keep an eye on. Support zones. Does Bitcoin hold above $110,000? If it breaks below, more downside is possible. Tariff, geopolitical news. Any new statements from the US or China could reignite volatility. Regulation and policy signals. If the Senate crypto bill advances or new clarity from the SEC emerges, that could shift sentiment. Further liquidations. If another wave of forced liquidations happens, it could amplify downward pressure. Confirmation of recovery. For a sustained bounce, volume and momentum need to pick up, not just a short dead cat bounce. Conclusions. Today's move does not appear to be a random glitch. It combined macro shock, trade war escalation, structural risk in crypto leverage, overextension. The cascade effect of liquidations amplified the drop, especially in altcoins. The partial rebound shows that some buyers saw opportunity, but the path ahead remains fragile. This kind of volatility is part of crypto's nature, especially when macro risks are high. Please stay tuned to Crypto Clarity 101 for more updates as well as simple explanations to the crypto world. Thanks for watching.